There is a substantial risk of loss associated with trading forex, binary options, stocks, or equities, collectively, asset classes. Only risk capital should be used for trading. Trading in any asset classes is not appropriate for everyone. Past performance is not necessarily indicative of future results. No representation is being made that investors will make profits, or will not sustain losses. Before trading in any asset classes, investors should consult with their professional broker, financial advisor, or financial consultant to determine whether trading asset classes is appropriate. Investors who trade in any asset classes should only do so if the capital used for this purpose represents funds that an investor can afford to lose without adversely impacting the investor's lifestyle. No trading strategy or methodology is without risk of loss. No trading strategy is risk-free, and no trading strategy can guarantee profits or freedom from losses. Investors risk losing the cost to execute any transaction, including associated commissions or fees. You should carefully consider whether trading in any asset class is appropriate for you in light of your investment experience and financial resources. Any trading decisions you make are solely your responsibility and at your own risk. None of the statements or materials in the Auvoria Prime chat rooms constitute a solicitation or recommendation to buy or sell.
Steve Vetterl here on the mic and the camera. You can see my big ugly face on the camera today. So I'm going to be streaming live here for just a quick shot Tuesday afternoon. I try and start these somewhere in the area of 10 after the hour on Tuesday, 1 p.m. Eastern time. So welcome to the weekly edition, I guess I should say, of the software strategy and midwork craziness and all kinds of the nuttiness going on in the market. So without further ado, let's go ahead and share the screen. So what you should be seeing is the FinFiz screen here. I'm just going through some of these charts. We're going to take a quick look at the Forex Factory. I always suggest when you go in and look at this is filter out all the noise. Ideally with something like this, really only the red folder events are really all that matter, and there's different things going on, but certainly all eyes on the Fed as always to see what happens. This is in Eastern time here, so these coming up essentially in just a little bit. Chairman Powell's going to speak. I'm going to have some time to actually have this streaming live on the Bloomberg here in the office while I'm getting a bunch of other things done, but have a quick meeting coming up here pretty soon with the clients. I'm just going to make this brief. So he's speaking today. Obviously, note that. Inflation takes center stage. Everything right now is all about inflation. I've talked a lot about that. If you haven't tuned in any of my Saturday calls, please do. Talk a lot about how there's a circle of children and they have their apples, and that is the supply or demand of the marketplace. And so I would encourage you to go through the next couple of Saturdays and because I'll tell you that circle right now is expanding, and realistically the amount of supply that has been coming on the market has shrank a bit and now is beginning to expand again. So maybe the market has begun to absorb that, maybe they haven't. I've often sort of caveats in a lot of my discussions recently because in all fairness, I've been very plugged in the last couple of weeks to a lot of the macro headwinds that could be affecting us, which is certainly bringing out volatility in the currencies and so forth. So let's go to the charts. Let's take a look at the dailies here. No surprise, we've been a rally and is ridiculously oversold in everything from tech to small cap to large cap. Seen a little bit of a tick up in the energy space. We've seen a raging tick up in the gasoline space. So I'm going to get to a chart on just the price of gas here. I think they go out to a weekly to see what's going on, but look at that chart. But if that isn't inflation, let me go to a monthly. So here's the entire data set all the way back to 99. Hasn't been higher. So this is just absolutely a bananas move. We're not really talking about currencies here, but this is affecting everybody's daily life. It's just bringing more volatility into the currency mix. All right, so no surprise, we have been ridiculously overbought in the dollar. The crushing that is taking place. Let me just go back up and really want to look at this from a weekly perspective here. So when you have oversold conditions or overbought conditions, you have what I often refer to as an extreme out of volatility. Oftentimes that will level itself out over time. It's what's called mean reversion, so things just trade, sort of wild. As if it is a liquid market that's trading within a particular range, usually what will happen is if it gets outside of some sort of normal set or standard deviation, it's going to want to snap back over time. And that's what we're seeing a little bit in both the currencies and almost every other major that's related to the dollar. So take a look, just the big picture. Some rallies, as I expected and mentioned, that probably have a little bit of what's called backing and filling going on. So enough of that. Let's go into the charts. 4-day rally so far in equities from a hammer reversal on the 12th. So if you are trading this with any of the MT4 based algos and or manual stuff that we have supplied, which is great stuff, it's good to see the activity in some of the Telegram moves I have occasionally will peel through. But I mean, ideally with a lot of these charts, and let me actually drag this over to the other screen. Actually, you know what? Let me just keep it here. Yeah, it's easier to see. Alright, so let's take a look. DXY. Lots of craziness going on. So drop it back to a daily, gives us a little better view. Actually want to take a look at a 30-minute. So these are just 30-minute clips, each of these candles. And we're inside of a type, but the move away from the high, which almost was a perfect, look at that. So there's that old century mark I talk a lot about again. It doesn't necessarily have to be, but usually any big areas, even though they are, in this particular case, there's a fair amount of resistance from a long period of time ago in this. But anytime anything touches the century mark on it, you'll typically have a pullback. And the pullback is really for no other reason other than it hit some sort of century mark, right? So when the S&P was hitting 5,000 and it was sort of climbing up in its ridiculous ascent from the lows of the 2009 correction, we had a period of time where it was just trend up in the daily moves, and then it just got ridiculously overbought and it pulled back. So I mean, century marks can be support and resistance areas, and I would certainly note that. All right, US dollar, let me go back to the daily. So now look at how fast we came back to, which was arguably what's called the point of control of the previous zone. This would be a zone that was formed by the movement into that zone, essentially the first, almost like a, breaking into a lower pattern underneath the support resistance, or underneath, in this case, a support point right here at the 1.0623 area, and then the balancing that took place inside this area came back to the center point. If you have an oversold condition, really oversold down here, you're going to snap back, and it's oftentimes the center line. You can put all kinds of fibs on this stuff, and you can Fibonacci out this in terms of retracements till you're blue in the face. But what it's going to not teach you is where price is headed. Price is typically headed back to, if it breaks inside the range, it's usually going to go the high of that range, test and fail, test and break out, fail, fall back into the range is the normal process, right? Doesn't mean something outside of that can't happen. Again, risk management, but just understanding. I talk just a ton about when a base is formed, and there's a lot of things that one can glean from that type of movement in and out of the base. But the most important thing to understand about that in terms of the base that's formed is that a lot can be told from that. So if it's back inside the base and it goes right to the center point, and this doesn't necessarily have to be a currency chart, right? And this could be an equity, it could be commodity, bond, credit markets, you name an individual stock. Just understand how the patterns play out over time in any given move. That's all I'm saying. All right, what else? Same thing taking place. Dollar pulls back. Cable's rallying against that as well. US CAD back inside the range. Keep in mind these are daily charts. Each of these days represent a single candle. Let's take a look at Aussie US. Let's take a Euro GBP, still inside the range, daily. Let's look at, it's a pretty decent rejection from this 86 level. So of note, it usually means we're going to go back down to the bottom of the previous range, which I'm not sure is really right here, but probably somewhere right in this area. I would imagine over the next couple of days we'll probably test that. See what else we got. Did I show GBP CAD over the weekend? I think I did. Alright, so let's look at a weekly. Really riding that Bollinger Band that I talked about on Saturday, so looks like we're due for a snapback, but I mean, really everything hinges on, and a lot of times what I'll do is I'll go, I spend probably way too much time on DXY, then I'll jump to GBP chart, and obviously this is a weekly, but you can start with dailies as your analysis, and then I will go to GBP CAD. I talk a lot about pin action, how that sort of plays out in different currencies. So from a starting standpoint, you want to start with the baseline DXY, move on to, the other one, and then move into GBP CAD. What else can we take away from this? Because I don't want to really spend a lot of time on this, but I think it's important that everybody see how it's been riding the Bollinger Bands, which is really just a measure of being stretched out. Typically as a precursor to a snapback will be some sort of process where the market will be overstretched in any market and will ride the upper Bollinger Bands enough time, and then you're really overdue for a snapback. So a lot of times those, trading what I call the extreme outs is a good example. And for those of you just joining us, welcome to Auvoria. I know we've picked up a fair amount of subscribers, which is certainly good to see. Do note that in my Telegram channel, I have posted a lot of Forex-based stuff. So a lot of, it's just like, I'm always pitching just, do big macro, education as far as all those areas. But, there's a lot of really good stuff I've posted in there. And educational, but I think probably some of the most important stuff is the different patterns that I've posted. Probably one of the hallmarks of a top trader is he or she's ability not only to sit on their hands and not trade, right? Just remember, cash is a position as well, right? cash is not be earning you much money, but cash is, it's an investment, right? It's an investment in cash. So the ability to sit and wait for the trade, right, first and foremost, but at the same time, their ability to envision the patterns playing out in any given period of time, right? Those two things, along with just an understanding of any risk management skill, those are the three big things that most of the top traders, at least that I've come across. And one of the interesting things is, and I probably could pull some articles out, some really good stuff. There used to be a magazine that was in print for a chunk of, I think it was like 2017. It's called Modern Trader. It's actually a pretty good publication. It's part of Euro PLC, which owns Institutional Investor, for those in the know. They did a lot of issues, like 30 under 30, 40, top hedge fund traders. And, those three things were the single most important things that most of those people said in their education that was important. So, I always tell people you can listen to podcasts till you're blue in the face and learn all this stuff, but if you don't understand the core of how markets work, and the core of what makes the inner monkey, right, tick, get a grasp on that. Actually, if you guys are looking at the screen here, I'm going to type in a name for you. So his name is Dr. Brett Steenbarger. You can see a lot of people search him. He is one of the most successful coaches in all of trading. He's written a number of books. I've had the opportunity to talk with him a couple of times. He actually came and spoke a long time ago to one of our early trading classes in Goldman back in about 2011. But he runs probably one of the most active out there in trading psychology. So he has sort of the best of, but this guy is hired typically by hedge funds. He'll go away for a year and won't contribute to this blog. But this blog is probably one of the single best that I've ever read. Hasn't put a lot in recently, because you can see he's gotten maybe 9 posts so far this year, but there is an absolute wealth of opportunity in this blog. And you can see the years where he's been more active than others, like in '09 during the correction and so forth. But he has like a best of library in here that is really some of the just absolutely phenomenal. If you were to read every one of these pieces in his book, which you'll see some overlap between the two, guy's done Forbes articles, interviews on CNBC, but he's really studied trading psychology, and I try hard. When I'm on my when I'm up on my soapbox, if you will, right at the podium, and I'm talking about just really putting the mindset to being a good trader. Some of Brett's basic skills are just core to what I talk about. So, yeah. So maybe I'll just put a post on. Copy that, and I'll drop that over when I finish the broadcast here. I'll drop that on the Telegram chat channel. But that's pretty much all I had today. I didn't really want to get too deep. I've already gone through a lot of this stuff. Do note that our sell-off in crypto is no surprise. We have sort of predicted the decline. Risk off is risk off, right? The real tell is what takes place in chart patterns after risk off, right? Is it immediately risk on, right? Things rally right back up? Or are we still continuing to build some lower zone that we're trading in sideways before there's a break lower? I can't answer that question because we only spent a couple of days in this lower area. But we bolted right down into it and then had, actually arguably kind of the easiest to see here. We broke down into that with huge vol. I illustrated this on Saturday, but broke down in this area with huge vol, and we've rallied off that. But this was sort of that rejection reversal. It's an important chart pattern. It doesn't necessarily mean you're going straight up, but it does mean that you will more than likely take a break and trade sideways. This technically could be building up, this was what, 2 days ago, into that slingshot back. So if you're looking at the camera of me, you know, and this is a chart, it could be, you know, whichever way you want, but you've got essentially the X and Y axis, right? And you're heading into a decline that's steep. I should probably show like this, a steep decline. And then you always have that little sort of snap back because it's oversold down here, right? So it snaps back a little bit. The tip of that before it continues down is called a slingshot. It is an excellent re-entry point after a period of basing. So, but ideally you want the pattern not necessarily to look like this. Maybe isn't the easiest to see, but you know, just know that you're looking for a place to get on trend down. The only concern I have with that in anything like this particular pattern is that you're essentially late in the cycle, right? So ideally when it topped out, let me just go back to weekly. It's easier to set it up. If you were on a short, or you wanted to get short, this would be your re-entry point here. So let's say you missed this decline, but you wanted to be short the coin. Your 52,000 was your re-entry. Went lower again, snapped back, spent some time basing, came back up to a bunch of important moving averages and went lower, right? So there's a lot of tells in this, even though these are weekly candles. If you were sort of swing trading this for a long period of time, there's a lot of tell in this. So continue to have the faith. I will hopefully continue to be on the mic, which by the way is actually kind of cool having this mic here, I must say. We've done like lots of client meetings. Everybody's like, hey, what's with the big microphone? But the cool times is a lot of my partners will be in the office, so we can just be like, hey dude, you're on the mic now, dude. I'm on the mic. In any case, wish everybody a happy week. Be kind to each other. Always do good things for those, and I will post the Steenbarger link on Telegram. May the trades be with you.
There is a substantial risk of loss associated with trading Forex, binary options, stocks, or equities, collectively, asset classes. Only risk capital should be used for trading. Trading in any asset classes is not appropriate for everyone. Past performance is not necessarily indicative of future results. No representation is being made that investors will make profits or will not sustain losses. Before trading in any asset classes, investors should consult with their professional broker, financial advisor, or financial consultant to determine whether trading asset classes is appropriate. Investors who trade in any asset classes should only do so if the capital used for this purpose represents funds that an investor can afford to lose without adversely impacting the investor's lifestyle. No trading strategy or methodology is without risk of loss. No trading strategy is risk-free, and no trading strategy can guarantee profits or freedom from losses. Investors risk losing the cost to execute any transaction, including associated commissions or fees. You should carefully consider whether trading in any asset class is appropriate for you in light of your investment experience and financial resources. Any trading decisions you make are solely your responsibility and at your own risk. None of the statements or materials in the Auvoria Prime chat rooms constitute a solicitation or recommendation to buy or sell.